Consumer confidence in South Africa dropped by 7 index points in the third quarter to 4 as fewer consumers expect the economy to improve. This according to the FNB BER Consumer Confidence Index. Cees Bruggemans, Chief Economist at FNB, joins me now in the studio to take a look at those numbers. Cees, I guess the surprise was not in the drop, but perhaps the quantum of the drop. Did that surprise you?
Yes, the third quarter was a big drop. And specifically against the background of the last 12 months, where we had seen some hesitancy creeping in, but the movements were small but down. Now we get a fairly large, big one, and cumulatively we have now dropped quite a bit.
Let's talk about the top lines out of that survey, just in terms of the way the main points came in. Just give us a summary of that.
It was specifically the reading of how the consumers see the economy that dropped very substantially. In the second quarter, that was still at plus 17, very comfortably high, now plus 2. That's a 15-point drop. I think very much reflects the news flow. Last couple of months has been bad about the economy, but also, of course, the international situation. Compared to people's view of their own finances, that also came off, but to a far lesser degree, from a still very high 22 plus in the second quarter to plus 15 in the third. So that's a sizable drop, but not as much as when it comes to the own economy. Yeah. And the third question was interesting in that there was no basic change in whether now is a good time to buy durables. That remained at about the -4 level.
Yeah, so let's talk about those key components. Let's talk about the surprise in the expected performance of the economy. The drop in itself, I mean, that was quite substantial. Now, were you expecting of that?
We certainly expected, given the news flow, that there would be a decline. And what is interesting is that people's perception of their own finances hasn't dropped off as much.
Why is that?
Well, that must be an indication that people are better off, the majority at least,
sure,
than what is perhaps generally expected to be the situation. And of course, when we look at real income gains, that remains a very positive factor. So yes, there has been erosion, there has been fading in their own finances, but it remains a sizable positive majority still at this point in time. But that there is a general trend going down, if you now cumulative look over the last 12 months, absolutely.
But which is a bit of a surprise, because we saw numbers coming out of ADCOP today, the employment index, showing that there actually has been very little growth in terms of overall employment. In fact, for 2011 as a whole, they are seeing no improvement in the number of permanent jobs. And the only jobs that have been created have been within government.
Yes, but that is not what we measure. We basically look at the entire universe, sure, urban, and we ask people to rate their own finances. In other words, it is not just your employment levels,
right,
but it is specifically also your wage and salary improvements, or the lack thereof. And although there are very large pockets of people experiencing hardship, there apparently remain a larger majority of people with whom it still goes well. But that majority has now shrunk. But it is just that majority has not completely disappeared. It is a gradual decline that we see taking place there.
Yeah. Now, the other surprise that came out of your survey is the views on the time to be buying durable goods. What would you ascribe that surprise to?
Well, that has then remained the same, and has been the same for the past 18 months at about -4, -5, which is basically neutral for that particular question. And the view there, I think, is that people have mostly have been highly indebted. They have remained cautious when it came to making big purchases. That has not changed. And in that respect, then, that cautiousness has essentially been there throughout. It is the other views that have basically started to come into line with a far more basic cautiousness.
Right. Now, what are we to make of the overall condition of the consumer given this? I mean, we have the expectation that interest rates, the central bank may come back and cut interest rates, and some people are saying that may well not happen. I mean, we just heard Bridget Taylor now talking about 6 months out.
I think what the consumer is doing here is confirming what we see taking place in any number of basic economic data.
Sure.
There is a slowing underway, and the consumer confirms this, and specifically confirms this when it comes to the broader economy. That we have to be careful of not overreacting, I think, is indicated by the way they still signal their own finances. Yes, there has been a pullback, but it remains orderly at this point in time. If the consumer confidence levels remain at these levels or go somewhat lower in coming quarters, that is an indication, I think, that consumer spending can expect it to fall off some more compared to what we have seen.
And at FNB, have you had to revise your view on whether we're going to see an interest rate cut this year or next year?
I have been in the camp for the past month or so that you're going to see an interest rate cut earlier rather than later, with the one proviso: how fixated is the Reserve Bank with this European crisis, and is it keeping its powder dry while this is playing out? That may keep things up, but does the economy warrant an interest rate cut? I would say yes.
It does, and you'd argue that that cut should be coming in this year rather than next year?
I would expect it to come sooner rather than later, given the circumstances we find ourselves in, but the proviso is this European situation.
Yeah. What about the growth outlook? Some people are saying the Reserve Bank's focus has shifted from the inflation outlook. Yes, now we've got a weakening rand. At the same time, we also have inflation trending to the higher band of that inflation target. But some people are suggesting that they are more worried about growth and therefore will tend to take the cue from the growth outlook for the South African economy.
I think the inflation rate is best described as target bound. In other words, it may go for a short period go out of the target but then falls back in. Compared to the economy that is basically disappointing with its performance, there is underperformance growth-wise. We reason in the 3–3.5% growth range. That doesn't really change too many things. It can be described as fragile or underperforming. And yes, I do think it has the concern of the central bank, but the proviso remains the European situation.
Indeed. Cees, thanks very much indeed for joining us today.
Thank you.
That's Cees Bruggemans, he's Chief Economist at FNB.